What's the code to a successful real estate career? Simple. More closings. But what's the real code behind that? Hi, I'm Mark McInerney, President and CEO of CodeMark Financial. And in here, we teach realtors, just like you, how to take full control of their real estate career. Welcome to Mortgage Money Genius. Today, we're going to talk about non-QM loans. Sit back, relax. 3, 2, 1. Off we go.
I just wanna be your superstar, 'cause it's not where you are, it's where you are.
So welcome. If you've been following along, you have realized that there's quite a bit to chopping up the entire mortgage process. But as I've shared with you guys, what's really important to understand is that the transaction lives and dies between becoming pre-qualified and clear to close, which arguably then is the mortgage process. The mortgage process is mutual to us all. If the mortgage closes, well, you get paid and your clients, they become homeowners. But what's important is being able to understand what those dynamics actually look like. So we've been taking you on this journey from talking about the value and importance of pre-qualified and being pre-approved and the difference. Then we've also then dove deep into understanding what pre-qualified and being pre-approved and how to line those little bits and pieces up, teaching you how to qualify somebody in 5 minutes or less. What's the vehicle that ultimately puts them in the house? Is it a conventional loan, an FHA loan, VA loans for our veterans, USDA loans for those big rural properties, jumbo loans? You've seen all of this now in the previous series and previous episodes. But now, my friend, I want to introduce you to something that is probably going to be what lending is going to look like tomorrow and in the future. You know, these loans at some level used to exist, and they probably were a little too radical and even liberal for that matter once upon a time because nobody really knew how to kind of keep them contained. Everybody remembers the no income, no asset docs, or the ninja loans as they called them. No income, no assets, no job, you're approved. But because of how crazy things got in the wild, wild west with those types of loans, well, we all learned a very hearty lesson of what happens when there isn't any level of regulation when lending money for home ownership. But now they're back, and now they're back better and improved. And they're better and improved because, guess what? The landscape of home buyers arguably looks a little bit like you and me. What do I mean by that? Well, sure, you're a realtor. Yeah, sure, I'm a mortgage person, but we're entrepreneurs. We're self-employed. And in our space, there's very few jobs that really offer a paycheck in terms of like a 9-to-5 paycheck. Most people nowadays are finding other ways to make income. And in most cases, it's kind of just where we are in terms of evolving as people. Nobody really wants to work for anybody else when they can work for themselves. This is where this type of loan program is going to be beneficial to that type of buyer. So don't be completely tuned or turned off by the fact that these loans may offer some traits that may not be as attractive as, we'll say, traditional lending. Traditional lending is just a way to own a house or qualify to own a house. Guess what? Here is another way to also own a house and purchase a house. And here's something else I'll have you consider. Even despite what maybe some of the nuances might be inside of these loans, a loan doesn't have to be forever, right? I mean, think about if you waited until your credit was perfect to get the right credit card, you'd miss tons of years of being able to establish credit. So a lot of everything is just kind of doing the exercise to be able to prime yourself to be ready for the sweet spot. And that's what some of these types of loan programs will offer. So in the next series to follow after this, we're going to break all of these down. But let's take a quick look, 30,000-foot view down on what the differences are. All of the loans we previously discussed in terms of conventional, FHA, VA, USDA, jumbo, much of what I mentioned earlier, those are considered QM loans. What does QM stand for? A qualified mortgage. And the qualified mortgage is simply meaning that it qualifies by the guidelines that exist today by, well, Fannie Mae and Freddie Mac. But for those that color outside the lines and need underwriting to also think outside the box, they would want to qualify for something that is non-QM or not associated with the qualified mortgage tightness, if you will. So, who might be some buyers that would maybe qualify for that? Well, we said entrepreneurs. Entrepreneurs might be ones that would want to take advantage of what is called stated income, right? They can say that they made what they did and they'll be able to justify the strength of their income by supplying large numbers in assets. You know, just because you and me may make a nice, handsome, salary income through the course of the year doesn't necessarily mean that that's what we pay taxes on. Again, one of the many perks of being an entrepreneur is those tax deductions. Also, these non-QM loans, for some that would be able to provide some level of documentation, they could provide what is called no or low docs, meaning little to none in terms of the things that would be needed. Show me some income, show me some down payment, show me some assets. Again, the things that fall inside of the qualified mortgage requirements. This also works very well for investment properties and also investors. You know, the more investment properties an investor has, the more difficult it becomes to qualify them for some of the traditional lending. And it's because of the amount of paperwork that is just required. And it's the requirement not on just the individual, but on each individual property that they own. And traditional lending won't allow a lot of investors, in a lot of cases, to have more than half a dozen to maybe up to 10 investment properties altogether. If you got somebody that's uber aggressive and is looking to really build a massive real estate portfolio, this would be a loan to consider for them. And what about foreign nationals? This great country was built on people that came from other countries. Now, I know that might stir some of you wrong, but America is beautiful because of the melting pot of what it provides in terms of our culture. And all of us here at some level came from somewhere else. And there are still people coming to this beautiful country for the opportunity that is offered here. These might be potential home buyers and will be future potential home buyers. They too have a crack and an opportunity at trying to purchase a house. And this would be a loan to offer to them. Take a quick look at what these different loan programs are, and we'll discuss exactly what they're going to be in each of our next several segments as we break these things down. All right. So again, it's been great that you have been following this far. I've got some really good news for you. We aren't even halfway through. This is one set of separate programs that is just going to massively arm you on being able to go and get more business. And especially here in Texas, where we have a lot of different industries that bring in a lot of different types of employees and also spawn a lot of creativity for more entrepreneurs. These are going to be the loans for those types of individuals, perhaps even loans for you. I appreciate you guys tuning in. Do me a favor, would you? Like, comment, and share. This information is good information. And the only way that good information can circulate to other people is by passing the good information along. So do that, would you? And I'd love to hear on what you think on all the information that you're learning in here. Please comment, give us feedback. What else can we provide for you? In the meantime, we're going to continue to grind in here, myself and my man Freddie. I'm Mark McInerney, President and CEO of CodeMark Financial. This has been Mortgage Money Genius.